Good morning. Today is Wednesday, January the 18th. The time right now in Singapore is 10:46 in the morning, and overnight on Wall Street, there's hardly any movement. But still, we are in the midst of a earning seasons. We have already seen some banks been reporting their earning result, and last night we have Goldman Sachs. The number came out wasn't ideal. The market was absorbing the report that Goldman Sachs fourth quarter earning has dropped 69%, and that's definitely casting a shadow over equity markets and in particularly the financial sector. And we can see price actually pull back, and we can see that over the 4 hours time frame, the Dow Jones, after hitting a high 34,342 this month, has not been able to go much higher for the last two trading days, and we can see prices has pulled back a little bit. And tonight we have the retail sales, and a lot of focus will be on tonight. And beside retail sales, we have this morning we're going to have some kind of update from the Bank of Japan regarding their interest rates thinking. Market is expecting the Bank of Japan to actually liberalize, maybe even doing away with the negative interest rates posture that they have been adopting since the start of the COVID-19 lockdown. So the thing is that the market now expect Japanese yield to go up, so that is going to have an impact on not only the Japanese yen, but is also going to impact Japanese equities. So these are the two main events today for Wednesday, January the 18th. So as we can see, the pullback here is technical. Market has taken out this very minor and very unstable support line. So we will have to take this as a clue that short term we may see some weakness going forward. Over in the S&P 500, we also see the price hitting above 4,000, but there was no aggressive follow-through buying. Now we can see prices back below 4,000, currently trading at 3,990. So this could be a fake move, though be very careful. Like I've mentioned yesterday, 4,000 wasn't a critical level for me. It is a round number, no doubt, but it is not on any chart point. Okay, so it's not critical level. So the prices now is hovering in between 3,972 to 4,029. So this area will be an area of, I would say, vulnerability, excuse me. Now, over in the Nasdaq, we also saw that the market has rebounded beyond the 61.8% retracement to 11,616. Okay, and there hardly any movement last night. The market is basically hanging on for dear life. So we want to see how the market will pan out. So the current earnings season is mostly focused on the big banks, so not so much on tech stocks. So obviously the Nasdaq 100 do not have very major volatility, as we can see here. Okay, so the market will have to see how far this 11,616 can hold out, and there is the possibility, because Dow Jones exhibit short-term weakness, maybe we can see follow-through selling in the days ahead. Okay, over in Hong Kong, we can see the prices is also hanging on, basically not giving up much of a ground after hitting almost close to 22,000 last week, and my target is still nearby 22,118. So again, no major news is going to be reported as far as China is concerned. But yesterday we have the GDP report. The market did not fare as badly when compared to what a market was fearing. For example, retail sales, for Chinese retail sales, they were expecting a negative 7.8% drawdown on a month-to-month basis, but it came in still negative, but it's only negative 1.8. So that was a 6 percentage point missed, and that could be seen as on a relative basis considered to be a good number. But over the long run, we can see the Chinese economy is definitely slowing down dramatically. And now with the reopening of the China border, we hope that things can get brighter. There's a lot of hope and expectation that China economy could be performing the role of a ballast to hold up the global economy. So there's a lot riding going forward for this year. So over in the Shanghai Composite Index, we also saw a pullback from 3,251, which is the highest traded for this month itself. And we can see prices right now is not really doing very much. It's just basically consolidating. And the fact that market has taken out this previous support line, now turn resistant as the market goes higher. Whenever it comes close to this line here, I think it will act as a resistance, technically speaking. So based on what we can see, there's a very clear 5 wave here. So if there's going to be any pullback, I think the market may actually challenge at some point, challenge this level of 3,153. Okay, so do watch out for this potential level here. And over in the Nikkei, again, the market is having some profit taking in ahead of the BOJ meeting. It's going to be due today, but there was no timing being listed. So you can see going into this month itself, you can December has been falling and falling and falling, and then despite a rebound from early this month to a high of just under 26,600, the market has fallen back. So right now, what we can see is that over the last couple of days, we can see some profit taking going on. So this is just to be on the safe side as the BOJ announced its latest monetary stand. There's going to be a sea change. A lot of market participants is anticipating a major announcement from the Bank of Japan. They may impact both Japanese equities as well as the JGB, which is the Japanese government bonds, as well as the Japanese equity. So we are going to keep an eye open for today's announcement as far as Bank of Japan is concerned. Okay. Now over in dollar yen, we can see the same thing. Okay, we just maybe have the release of the data. Let me see, because the market had just had a big move. Okay, they do nothing on the interest rate front. They still maintain a negative interest rate of 0.1, negative 0.1. So you can see the dollar actually rebounded as we are speaking to 130.67 as we are speaking. Market is now retracing very aggressively, but I would think that this is basically a technical rebound. There is no change in policy. Of course, we will have to look into details as of what is being announced, because what we are seeing only is that they maintain interest rate unchanged, but what they're going to do with the yield, we have no idea. Okay, so we will have to look into the news later on to get a better understanding of what this means to the dollar versus the yen. Overall, I think this is a down market, and do watch out for the possibility of this unwinding later on in the afternoon. Over in Euro, on euro dollar, we can see that as the dollar goes up, the other currencies are pulling back, and this is a technical pullback also. The market right now is trading within this rising channel, and the market peaks out at 108.74, and market now is pulling back. There's a possibility it will pull back all the way to 107.24 and even to 106.70. 80. So within this bracket of prices, it does looks like if market can stabilize around here, it is actually quite a good level to consider taking out long positions on the basis that we see a reversal signal within this bracket of prices. Okay, Aussie dollars have not had major reaction so far. Actually, the whatever is being announced in Bank of Japan does not immediately impact the Aussie dollars. We can see the Aussie dollars is still very elevated, currently trading just below the 70 cents handle. The high traded this month is 0.7019. Okay, so we are only about what 20-30 pips away from the high. So overall, it is still maintaining a very positive outlook. If there's going to be a pullback, I think somewhere around the 0.6875 should be able to hold this round if there's going to be a pullback. Over in sterling, we see that the market has just reacted to the downside. Not very much, but you can see that the high traded was 123. And you can see that the market has been hovering just under this middle line of this rising channel twice this week. We can see the market actually challenged, and at one stage was actually even beyond this midpoint, but couldn't hold on to it. There was no single buy here that actually closed above this midpoint, and this midpoint here is currently looking very much like a resistance line. So we have to continue to watch this rising channel midpoint level. Okay, if there's going to be a pullback, I think the 1.2070 to 1.2020 levels looks like a good area to consider picking up some long position, again based on the basis that we see a reversal signal in the bracket of prices. Over in dollar CAC, we can see hardly the dollar is rebounding a little bit. That's why we can see that the gold is coming off. So if the market continues to rebound, this is a technical rebound, and there's every possibility for dollar CAC to go up to 134.70 to 135. So if this is the case, this is setting the stage for lower gold prices. Okay, so we look at energy prices. This morning we have a high traded at $81.34. Now we are getting very close to taking out the existing high for the month at $81.50. And if this continue to go forward, I do see a possibility of this three-wave extension going up all the way to $83.87 to perhaps even $87. So we have to watch out for this particular move. There's still a bit of room left. But if you have not already bought, this is a lousy price to get it in unless you have very, very short-term view, okay? Now over in gold market, like I said, if dollar is going up, then the precious metals complex is likely to pull back. So far, we have seen gold went up to 1,929, and current level is at just above 1,900. So no, 1,900. So basically, it is hovering just at this current level. There is a possibility if the dollar continue to rebound, then of course we may be due for a pullback, maybe to somewhere near the $1,880. Let me see if we can get back to these levels. That will be something to consider. Yeah, $1,667. Yeah, this is where possibly the market may actually hold up. Okay, there's going to be a pullback. Now over in silver, we also see a bit of a pullback, but technically speaking, we have two things going for it. Okay, first we have this rising channel. The price is still within the rising channel, and the price is just near the lower band of the rising channel. And then you can see that there's this line here that previously acted as a resistance, now is acting as a support. So in combination, prices around this confluence of prices will act as a support going forward. So there is very little downside potential for silver based on this consideration. But of course, if the price traded and closed below the rising support, then maybe a new structure could be in place. But until that happens, we will only have to look at these two conversion of prices somewhere between the $23.70 and $23.80. It should be able to hold up and then maybe create another rebound. Okay. Over in cryptocurrency, we continue to see elevated prices. Bitcoin managed 21,600. This is the highest level since October last year. So we can see that prices has come a long way, and there are already talks of the end of the crypto winter. So is it going to be the case? I think it's a little bit premature in my opinion, but we can see price already taken out this very, very unstable and very, very steep support line. So like I said, this is not going to be critical. I won't be consider this as a break, but it does give us the idea that near term maybe we can see a pullback in the crypto space. Okay, so do watch out if you are not already long. This is a lousy price to go long. Like I say, mentioned, there is this horizontal red line here, which is actually the November high of 21,488.60 that was traded in November. The prices actually took up those levels, but again, on the closing basis, it did not quite manage. So based on this, and there is this possibility the market may continue to pull back. Okay, some profit taking may actually take place. Over Ethereum, we also saw a marginal high at $1,605.50. Again, prices do look like they may be pulled back under the influence of Bitcoin pullback. If we see a sustained pullback in Bitcoin, it's going to be almost inevitable that this pullback may actually spill over into the Ethereum token itself. Okay. Over at Ripple, we have no new high traded. The high remains at 0.4090, and we do looks like there's going to be a three-wave pullback. And if there's a case, there's a possibility the market may go down and test the 0.3774 to maybe as low as 0.37. Okay. Over in Cardano, again, we do not have a new high traded. The current high for Cardano is 0.37, and following the pattern in Ripple, with a likelihood that we may see a three-way pullback to test the 0.332 to 0.322 levels. So this level actually looks like a very attractive level to accumulate new position. So if the market can hold out here, I think there is building a base for another assault to take out the so far the month high at 0.37. Solana is again very, very stable, although there was no new high traded, but the high traded so far is $25.02, very far away from where it was in December at just under $8. So we can see the price is relatively stable. It is possibly the most stable token right now, considering the pullback has been so shallow. So if there's going to be a pullback, I think maybe $21 is about all you can do. Okay. on the more extreme, maybe $18.52. Okay, but by and large, I think $21 should be able to hold up. Okay, now this is all I have for you to so far. Now remember, tonight we're going to have the release of the retail sales for the United States, so stay tuned. That will be released at 9:30 p.m. Singapore time. In the meantime, take care and I'll see you tomorrow. Bye bye.